Jamie here. Friday, February 14th, 8:56 a.m. Happy Valentine's Day to all you lovers out there. Talk really quick about the market, some of the names I'm looking at, go from there. S&P futures, kind of flat earlier, little red right now, slightly in the red. Hit overnight. The SPY actually got up to 611 in the early morning hours, right before Europe opened, and just been chopping around ever since. Then this morning, we got the retail sales data came out, and it was not the best data, right? Negative 0.9% decline versus I think a point negative 2% decline estimate. The worst retail sales number in a couple of years. In January is traditionally a seasonally weak retail sales number. So then, of course, what they'll do is start to blame things that went on, right? The cold weather, the Arctic blast. I guess it was the coldest January in I don't know, since 1980. I don't know the exact data. The wildfire. So they'll always look to some things, but the market just it almost looked like no data came out. Little blip, and then just chopped around. So I guess they'll shake that off, and yeah. So that's that. So we pretty much got a lot of the tricky stuff out of the way in regards to data: CPI, PPI, retail sales, and should be interesting. So I mean, yesterday's action, I almost thought 610 was going to happen yesterday. We closed a hair away from all-time highs. Would be nice to see that um, lower low, lower high, lower low scenario get negated today. So that'd be 610.75 on the SPY. So we'd love to see at least a test of that today, or break a little bit above that, maybe some chop, and then next week, don't forget holiday shortened trading session, President's Day on Monday, so only 4 trading days. But yeah, interesting. If last couple weeks we had the DeepSeek fiasco, you had the tariff fiasco the following Monday, and then this week everything looked great, and then we had the CPI data fiasco, and here we are. We might end the week at all-time highs. So pretty impressive, uh, and great stuff. And earnings have been good too. I think 75% of the S&P has already reported. Other things to note yesterday, and so watching that 610 handle, and I think we close over that today or next week. Then that 620 will be the next target, and maybe some chop first. US dollar was in the red yesterday, and that was despite the slightly higher than hotter than expected PPI data, and the US and yields were going down. So all good stuff. All right, so now individual names. And the VIX. The VIX is back down at 15. So we've hit that all the way since December, November. So that's kind of been the baseline. So probably chop around there as well, but a good sign as well. All things considered, you even look at the VIX this week, it almost looks somewhat muted despite some of these moves. All right, so now individual names. So Roku, finally. I mean, what else can I say? I put it on the watch list. Finally, I mean, they posted a great quarter, beat and raise, and then some commentary, especially around to their shareholder letter. The company pretty much said that they're going to be forthcoming with guidance, because typically they do conservative guidance, and maybe that's some reason why the stock doesn't perform well after earnings, but. This time they said, nope, we're gonna give you the latest data and use that to give our guidance. That's what they did. It was bullish. And I think that just in itself is bullish to stock. But you have a lot of analysts upgrading the stock this morning, raising their price targets. Even some of the negative ones, Pivotal Research, who's been negative on the name for a while, actually upgraded the stock this morning. Bank of America, uh, Wells Fargo upgraded the stock from equal weight to overweight, and then you still have some detractors, some folks who don't believe in the story, and that one of those is MoffettNathanson, who killed one of the rallies a couple of weeks ago, kept their sell rating and raised their price target from 50 to 55, and and Rosenblatt maintained the neutral rating on Roku. So we'll see how it plays out at the open. If I had a high conviction in the move, I thought they were going to post a great quarter, but sometimes posting a great quarter doesn't give you the result the next day in the stock. And Roku is probably one of the best examples of that. So I wasn't as convicted in the move after the earnings. So happy to see it here. I would assume my February 110s for next week going to open up over 100%, maybe 225, 250. So I might just look to close the last out, and then possibly look for some spec calls if it holds over 100 to 108 and change is I think it's the 2023 highs. I don't know what month that is. And then after that, then you have to go all the way back, and then 120, I guess, will be the next spot. So I think if you can get over 108.75, then that's a go, and that's going to 120. My thoughts. I'm not going to go on a whole detailed due diligence rant on Roku, but I just think it is the only neutral content provider for all the content that's out there. It's an M&A target. They talk about 2026 being finally profitability, and it's a cash cow. the monetization business of the platform is where the money's made. It's an 80 or 75 to 80% margin rate. And as that flips, it's going to be a cash cow. Similar to some of these other names over the years that you've seen that it cost a lot of money to scale. They weren't profitable for years and years. And I mean, I hate to use Amazon as an analogy, but they had a $5 billion cumulative loss that they're reporting on their filings for years. Everybody thought they'd be bankrupt. The whole bear case was that they were subsidizing their delivery business with Amazon Web Service. They would lose money. And then now they're a cash cow, throwing off billions of dollars in profits. So not saying that's Roku, because Roku's not going to be, well, I mean, it'd be nice. I can't see them ever being that big, but obviously I think there's opportunity. So, all right, enough rant on Roku. Great session for Teladoc, and it's gapping over 14 here in the pre-market. It was up 7% yesterday. Uh, I might look for some April strikes. Sometimes, and people always ask, so I locked in those the February's, the 1250s, which of course in hindsight maybe I should have held just a couple. I had the Marches. I locked a lot of those in already, and then I went get the March 20s. On the dips earlier in the week, some people message you average down, and typically I don't average down on options, right? If I do look to quote unquote average down, I'll go get later dated strikes, or I'll go get lower strikes. So I might look and get some April 20s, depending on what it looks like here today. 1475 is the high from a couple days ago. Break stats off the races. Again, their earnings are last week in February, so that's why the March strikes are important. That's why I closed my February's. But still a great story here. I mean, any positive, just a hint of positiveness on their earnings call, I think it's over $20. So continue to hold those. And then some lottos this week have been disappointing. Not first, but AMD yesterday, first insider buying 12 years, and it looked like it was going to break out up to 114, and it broke through there. It looked like it was off the rate, and then it just couldn't find its footing and just melted for the rest of it. It was hitting lows into the afternoon despite the market rallying. I mean, one of these days, I mean, I hope it's from this level that it bounces, not from a much lower level. But I got the calls into next week. They're spec lotto's inexpensive. We'll see what it does here today. If it gets back over 114.60 or so, I might look to add some more strikes. Because the time it really starts to move, I think, is the money. That's when the money's being made. Unfortunately, I did AMD instead of the Intel. And Intel I've been watching since the start of the week, and sure enough, that has been a monster this week. But AMD hopefully will duplicate that at some point. So that's AMD. And then same with Dell. And Dell was looking great after super micro earnings, trying to break 114. Tried twice, failed. And then yesterday it had a price target downgrade, from a bullish analyst, but the bullish analysts continued their bullish stance. Despite that, stock was down 2%. I don't know how much that price target downgrade, or cutting the price target did for being part of the catalyst, but it is what it is. I'll still watch that one. 50-day moving average is 113.83, so still watching that. And then the last of the batch here is Arista Networks, which got calls last Friday. Looked great last Friday, looked good on Monday, and then it's been a bloodbath ever since. Even Cisco earnings, and Cisco reversed the gains yesterday. I thought that would be the catalyst. Arista reports earnings next week, so going to be tough for me to add any calls on that for the foreseeable future. So I'm going to be put on a watch list, but I won't be adding anything there. iRobot, a quiet session yesterday, still up 2%. Another name I might look for some strikes on, maybe March 14s. So I have the March 15s. Those are kind of, I would call them flat, but they're really not if you want to get out at the bid. But might look at some March 15s. I think 1050 is almost a foregone conclusion. It's just a matter of when. And then once that happens, who knows? Then 13, so on and so forth. Redfin, I was talking about it yesterday that mortgage rates are a multi-week lows. It's only a matter of time before folks start throwing in the towel. Housing market picks up. Then that partnership with Zillow now, allowing Zillow to use them for apartments.com and their rental listings. I just think especially with this recent chop, I think it's ready to break out. So don't be surprised if I add more strikes on Redfin. I got some spec ones for into next week, inexpensive. They're even more inexpensive now. But the March strikes, like the March 11, March 12s, look inexpensive on a risk-reward basis. So especially if you look at the move it did back in the fall, August, September, all the way up to $15, nothing has really changed in my opinion, right? So I think a lot of it was into the summer and into the fall, but the market was pricing in a lot of rate cuts, and those have happened, and then now it's been scaled back. So that could be some of it. And then Lemonade, just crazy. It was down 19% on Tuesday. a little red day on Wednesday, and now up 15% yesterday. No news, no catalyst. There was no upgrade, no downgrade, no insider buy. So it just shows that the shorts they're scrambling, right? I mean, they sense blood, so they pressure it on Tuesday, and then they sense, hey, maybe we should lock some in or start to cover, and that happened yesterday. And then, look, the 50-day moving average 37.42. The calls into next week, similar to the iRobot calls, less expensive. So maybe some 42s, 42.50s. Premiums are insane into the following week with earnings. I mean, the 55.60s, even those are kind of pricey. So, but not ruling that out. We saw what happened after its last earnings. The stock was like 18 bucks. Couple of days later, it was in the 20s, and then at Investor Day, it was near 40, 50 a couple of days after that. So, not saying deja vu, but certainly there's a possibility. History uh, sometimes repeats itself, right? And that's that. Some of the names I watched: the Lemonade, the Teladoc, the Redfin. Yeah, I think that's it, folks. Let's have a great day. I'll be back on audio later. Looks like SPY's gonna be right at 6:10 here at the open. Rock and roll.